Hello, friends. Just a quick review of a few things here, not to disturb your peace and intercept your privacy. It is good to see if the system you're following still holds the truth and is still valid during complex news structures. This is a chart of ES. I'm just plotting these arrows by hand. Everything else is fully automated. And now, just to review what we're looking at on the left side, we have this trend. This is 200 and 160 period moving average of multi-day VWAP. Now, this indicator can be found anywhere you like. So, VWAP is in all the platforms. And I am taking the current VWAP and yesterday's VWAP and putting a bunch of moving averages just to synthetically generate what we call as a trend. And we also talked about earlier is the snapback of the situation and how far are you away from the mean, and you snap back. These markets are mean reverting markets. That's all there is. On the right side is the larger time frame, which I think we discussed, 18.36 point Renko charts, on which we have the oscillator, which has a lot of oscillations, non-correlated oscillation formulas. And here, the idea is to give us the context on a very larger swings. Now, this is almost like 3 weeks. You're looking at 3 weeks of data right now, right here, compressed without the time impressions on these prints of the chart. That means unless there's a real move, the bars will not be generated. So we are looking for this right here. There's not really any move, but the time is flying. These prints are not really doing anything. But if you look on the right side, all these hours of activity is sitting in just one bar. Unless there's a physical movement of price on the chart, it will not print new bars. So that gives us a better idea of the trends. Now, this gives us the zones, higher level swing zones go along here, right? Let's see, long here, short hair area, right? Now, this can last for multiple days. Long hair can last for multiple days. Here, I think we're not printing on the left side, it's too much to print, but you got the idea, right? This is, so once you see this structure, and I think in a couple of days, you should see, or maybe right now, we don't know, that trend might pull up, right? So that is a bigger time frame picture and context which needs to exist. What are these lines? These are just market maker levels, representation. Don't have to worry about it. So that is the context of this. So intention here is to go short. Where do we go short now? If the intention and the bias has been generated, how do we go short? Right? That's the whole idea. Now we go to the execution chart. Now this is 30-minute ES chart. You can go to any minute you want. Doesn't matter because these levels have nothing to do with any time frame. That is looking at the market information and printing the bias for next day based on that. Okay, so when we are printing this chart, maybe I'll start printing this chart as well on the right side somehow, because Twitter has limitations. But either way, so here the idea is once you have a bias, I'm going to go short. Right? The bias was also true yesterday. So tomorrow, yesterday you took probably a loss because when you say, okay, below this line, I'm going to go short. If you get pinned in, you probably didn't get in at all because it never broke this line. So I'm just saying, okay, short below this, long above this. But the bias is on the, I do larger swing trading. So my bias is I want to know the big areas of turns. And I trade in the direction of the turn. So right here, the intention was to go short. We shorted the market yesterday and held it overnight, right? And then there it is. Minimum targets are these green lines, and it went to these target lines, tried to stop here for a while, then didn't like it, go down, and there we go. And it stopped right there on the blue line. So it is suggestive that day by day, these blue lines be plotted on your chart, and then you know the context. Why did I get out here? Because if you see here, the context as explained earlier, the blue lines and the green lines, all of them are coming, bunch of them coming together. So that's good enough for me to get out. Yeah, I missed 10 points, but it's okay because we got a big move, 90 points, right? So we doubled the money in this big move. Now, going back to here, if the context is to go, coming up to go long here, this long never triggered until late night. So it triggered at the close and it went on very nicely. Now here, from here to here, and the context is to take shorts only, you can filter out the longs and just go short only. It's from this context. So how do we go short? Right? Well, first came the reversal. Right here, market went up to this previous guy in the green level. This is one shot. If not, short below this, short below this, short below this. Right? If you're taking options, if it goes way above this guy, you get out. That's all there is. If you want doing future trading or trading stocks, this will be a stop loss. You maybe got stopped out one time, two times. If you take a small loss, let's say you lost $500 by doing this. At the same time, you got huge money, $2,500 back, right? So ultimately, you have to think that way. Multiple contracts, take a short, one, take a short, let's say break even, and the big one, then the big one. So depends on what you want to trade, how you want to trade. The levels are there from where you can drive, where the algos drive, the big banks drive, and this is going on for years and years, almost 7, 8 years now, non-stop. It'll keep on going forever because this is market, real-time market analysis, what banks are doing. And again, at this point again, so from here to here, the context is to stay short only. And the trend is obviously going from way behind, shorts only. So this short, this short, this short, 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 right? Few days of short, and then context will change. So that is what it is designed to do. So now this is how you can trade one side, and why today was a short side. It started happening yesterday. Yeah, you took some pain overnight, but the context was set up correctly, right? On the higher time frame. Now, how about crude? I mean, same thing with the crude. We took some entries there. It went against us a little bit, but we're looking for a big move, right? So crude does a great job in finding the trends. Now, one contract of these is $4,000 right there. Again, going back to the larger time frame, trend is up, right? So now if you look at the, again, we talked about 19, 18 points to eliminate the time out of the system. CL here, it doesn't matter, it's same patterns in everything you see. Now again, if you look at this VWAPs, crude does a very good swings up, good swings down, multi-day swings up. Is very nice, smooth moving market. If you're not used to it, maybe you can investigate it. So if you look at the context, why we went short right here, instead of taking a short initial position, right? Levels Green level is fine, but look at the context here on the swing context, right? The location is correct to go short. Then location of long was here. It is nothing to do with any of the bands and everything else I'm showing. They are just looking at some information here. Don't worry about it. Oops. There we go. Now here, if you look at the on the right side, on the slower, timeless trend charts right here, long here, short here area, right? Long area, short area, long area. So you should be able to test all this without looking at any chart, anything else. You should just open an oscillator like this in your oscillations and don't look at any chart. And you should be able to plot this. Okay, I will be going long here or short here, long area, short area. Just plot those areas so you can trust your tool set, right? Short here. So based on the rules. So that is, I think, the context has to be set up correctly first, so you don't get confused. Because once you have your DP levels, or market maker levels, or your banking levels, they are levels. They can go anywhere from that level, and that is the whole mystery. How do we pick the right direction? And this VWAP ideas, which I think every professional use, is just that. Right? So here, long, long, long. If you just, okay, I will just go long only. What do you do? Simple, just wait. Wait for this oscillation to pull back. Long here, right? Long here. Now we'll talk about it. Long here, right? Long here. And now this is setting up for potential. Now this moving average also you need to understand that internally there's a selling pressure going on. And this pressure will happen for a while and then it will take off, right? So it may do this oscillation a little bit and then take off. So I will be biasing myself to go to the long side if it gets down to this level or this level, right? Right now, we just closed our short positions. So if you are going a short biased based on this, what do we have any reference point to go a short? And here was the short reference point. Right? $3,000-4,000 per contract, 10 contracts is 30 grand. You make your monthly salary and so you have to wait for the extremes and extremes to really do something useful, right? So okay, why did it stop here? Same thing, we have two fat green lines as you can see here. That's why you wait for these guys to come up, because the statistics shows 70% of the time when it goes to the green here, it will reverse. Goes to the green here, it will reverse. Goes to the green, one of these green lines, it will reverse. Why you have two, there's a reason for that. We'll explain some other day. But at the same time, and also we put a rule. When you see this green and the blue come together, very powerful. Right there. It doesn't matter. Any instrument you look at, the logic doesn't change, right? Because these are some hardcore algo rules, because algos have to follow rules. All right, so I think that is, I think we have shown that. Now we can just look at some stock also if you like, quickly. AMD is good enough. Now these are the big prints. Obviously, you can see they get attracted, but at the same time, these, now this is where I said if you add the market makers and the prints, because remember, banks are also market makers. So this level was printed, I took a short here. So I took a short here. So it went against me a little bit, that's okay. Because oscillator was right there, context wire is there, and I have my level there, I will take a short here. And then on the top we had this print, 4.2 million print. Well, this could be a short call. We don't know. So idea is pretty simple. Again, here oscillator set to go long. Now the trend, I brought this line up so we can see it right there. Again, this is a moving average of VWAP, multi-day VWAP, and it was pulled into this retest. Trend is up at this level, go long. Okay. Now this is happening on 18-minute chart. It doesn't matter. Now you see this blue line. It went there a couple of times. Came to this blue line. Went to this two blue line area. Came down. Well, this is also a DP area. It looks like green line. Went up to DP area. Then it went to the blue. Oh, you got the idea, right? So how about this guy? So now you got the context and you have the direction. You just need the oscillator to support you. Let's look at Netflix. So the point is there's a pattern of these which can be reused. So this is where the shorting area was. Green level is there, as I said, green and these blue lines converging is very powerful. I haven't put any DPs here, but we can check. Dark pool levels or big contract, we can check it out. Context was to go short here. So green level, went to the green level, second one get up to the green level, like second, this is a mini green and this is a higher green. Green to green. And driving from the blue. Now the trend was going short and you said, okay, I will just take short. So you have to wait for this guy and you know short hit this below this, right? When you went up there, as we discussed in the previous videos, now this is a green level inside the blue level, so we have a context of potentially taking a shot here, which I didn't print, but there we go. I didn't trade this one either, but the pattern is always there, always there. So this is what becomes a methodology and a trading system, because you can repeat something, and once in a while you get used to this geometric boundary motion, how it is working out. Okay. Now this is all happening during the news day. It should not matter to anybody. Meta, we can look at Meta, we can look at Microsoft. There's a big print here, obviously. Same thing yesterday. Went up to green level, came down. Now it is sitting at the green level. Context is it's gonna most likely. If it doesn't go along from here, it will go down here and then go along. So you have to track. I'm just pointing these levels so you can see the price, but you can see here roughly. You can print those levels at least for the last few days. So once you have these levels, and you can put some green line on your side as well, you get some context. So this is obviously 18, 20, 30 minutes charts. Here go long, above this you go long. 10-20% a day is easy to get. Here a context is go long, from the green go long, from the green go long, oscillator is telling you to go long. Here from the green level, green, green, and we have this blue and the green overlaps, very powerful area right there. Right there, oscillator is telling it should go down, and it went down. Here, green level is there, to the tick it came, and it says go long, it went long, right? So you have to see the context of this news. Now this trend was down right here. When the average is pinning down, and any release of pressure is going to be short for a few times, right? So this is all actually shorts, shorts. So let's see. This is a short. This one never came in, but this pressure is on the downside. Extreme pressure. All the green line, which is average of 10 things, is just pushing it down. And the oscillator is releasing its pressure, short. Releasing it pressure, short. Releasing it pressure, short. Now I would only take first two or three, then I will not take it because it will reverse. Then the pressure is released, right? And then what it does, it goes to the green line, comes back down here because it says it's going down. Now it's saying it's going to go up. It's going to say go down. It's going to go up, right? But you can't just treat it like that. You have to have a context and the levels. So now this is the big print, which is a line in the sand, which everybody is seeing. Professionals are seeing it. Some big bank did it, right? So now I'm not looking at a bigger time frame charts on this, which will give us some bias of the direction as well. This is just intraday. Where am I? Short below this. Second green line is here. Reversal will take place. Right, then long above this, it is holding. So I think this is how the actual raw and then moving out. Now, if you see how far it has gone through the away from the VWAP, Microsoft, it came back to it, and then it's just bouncing from there. A perfectly green level and a retest of the VWAP at the same time. So pattern again exists here as well. Meta will not be different either. Anything you look at is going to be the same. So these levels were printed. Offset is on the top side. So probably take a short and short on this. Worked out decently. On this day, this was a long area. For this day, this was a short area, but we are not close to this, right? At the open, again, the options were not there, but the stocks were there to go long. The algos are doing stocks, millions of shares, and they trade extended hours. Most of the business is already done in stocks and extended hours. And then the short area here, now this is a DP level, also green level. And then you can just see if you are trading this during daytime, this at least this level is not here for you. So what we have to wait for the reversal. How far have we gone? Have we gone to my green line? And then is there any blue and green line together? It went to the blue line, the green line. It's not overlapping completely, but now this is an overlap right there. Let me plot it right there. And we have a plot. And then we have a reversal. It's also a divergence here, but you got the idea, right? So let's look at Tesla. Same thing, right? This was already below this. It reached there. And it was a short. Now this Tesla, I put that on the bottom. You can just see the trend was down. Trend is down, giving me context to short here and short at this area. So the trend context, oscillation location, at the price level, perfect short. And the measured moves are always there. The measured moves are always there to use. Measured move of the swings. Measured move of the swings, right? Of this swing, this height. This height ended here precisely. So the downswings are working this way, and how about the upswings? So this downswing, and from this bottom to high upswing at the blue level, right? You have to just start putting all things together right there. Okay. Now if this swing is still holding, it's gonna go to this green level, 184, 183 area before it can think about reversing. So you have to patiently wait, don't show up every day for work and 10% every day. Now, if you want to make a lot of money, you have to slow down the most. And that's the unfortunate part of it. Less you trade, more you make. There we go. See that? Swings. Again, swing of this. It was reversed. Same height up, same height down. From this guy also, just look at the height, right? From here to here, same height here, same height here, same height from here to here, right? Approximations at the green levels. Now you're making some CS multi-day cash, doubling every few days. Now here it went along. I plotted this just right now anyway. So here we have a new swing, right? So take a new swing. So keep this swing, bigger swings. Just keep on swinging, right? So from this swing, it ended here. From this swing, it ended right here, precisely to the tick. Oscillator is there, green is there, multiple greens are there, right? So two greens are there, just take it. Options. $10 options if you want. Just Tesla alone can give you $10, $20 move. If you make 2 trades a week, 8 to 10 trades a month, you make more money than making 10 trades a day. That's the difference between professional swing trading versus not. But if you want to just enjoy pressing buttons, so these are the great areas to do that. Now this swing is here, and it lasted less than expected. It lasted this swing, and this swing is coming from the previous swings, right? This way. So keep these swings handy. Now what is going on here? So now the swing is coming, is going where? It is going to a blue line. Now it is overlapping with the blue levels. And there we go. So look for $10 swings. Market is telling you what it wants. Everything you look here is market is telling me what it needs to do. That's all there is.